You're a global investor. You've managed to build a multi-million-dollar portfolio of investments around the world, especially in the United States. Have you considered the estate tax? We'll dive into that in this video. Hi, my name is Javier Correa, and I'm a Research and Development Associate here at Nomad Capitalist, where we help 7- and 8-figure entrepreneurs go where they're treated best and plan their taxes. So today's video is for my friends that are Canadians, UK, Australia, and basically from anywhere that is not the United States. Americans, I promise, will have some videos especially for you coming up. So, my non-US friends, many of you are very successful, and once you've sold your businesses or you've accumulated some liquidity, you want to invest that liquidity to ensure that you have some passive income in your golden years, and so that your wealth can pass down from generation to generation. And you know, in all honesty, one of the main places where most global investors want to allocate their capital is the United States. The US still has some of the largest publicly traded companies in the world and some of the best investment opportunities. And in fact, if you're non-resident for income tax purposes, it can be very profitable to invest in the United States. However, one of the main taxes that people often overlook when investing in the United States is the US estate tax. So one of the first things that we have to discuss in today's video before we can proceed with the rest of the content is the difference between an estate tax and an inheritance tax. Now, I've heard many people use the term interchangeably, and this is actually a mistake. So let's clarify the difference. An inheritance tax is triggered when the heir of an estate receives the ownership of the assets of his deceased relative. So for example, let's say Mr. X passes away and X Jr. is his heir, he receives ownership of the assets, well then he would be liable to pay an inheritance tax. This is one thing. The estate tax, however, is completely different. Let's say we have the same scenario. Mr. X passes away. The executor of his estate would be in charge of paying the estate tax, which is levied at the estate level. And then once the tax is paid at the estate level, then ownership of the assets is transferred over to his heir, in this case, X Jr. So as you can see, the estate tax and the inheritance tax are very similar, but they are not the same, and it's important to keep this distinction in mind. Does the US levy an inheritance tax or an estate tax? Well, the US levies at the federal level just an estate tax. So unless you live in a handful of states that levy an inheritance tax, usually you only have to worry about estate tax in the United States. If you're a non-resident investor, then usually, again, you only have to worry about estate tax unless you have some kind of real estate or some kind of property that is situated in one of the states that levies inheritance tax at the state level. However, this video will be more broad and we will only tackle the issue of the federal estate tax. So, why is it important to consider the US estate tax when building a US investment portfolio? Well, the reason is the following. The US estate tax basically is different depending on whether the person that passes away is domiciled or non-domiciled in the United States. And this is actually a big difference. Most people are familiar with the concept of a non-resident alien for tax purposes, which applies to the income tax. However, in the case of the estate tax, domicile is the relevant criteria to determine how that person will be taxed. Now, US citizens, before you get excited, unfortunately, you are always considered domiciled in the United States. So US citizen equals US domiciled, there's nothing we can do. Green card holders and people who've passed the substantial presence test, that may be a bit more nuanced. It is theoretically possible to have a green card and still be considered non-domiciled in the United States, as domicile is much more complex, much more detail-driven. So the US is going to look at things like your center of vital interest. They're going to look at things like where is your main banking? Where is your family located? Do you have the intent of residing permanently in the United States? So all of these things are taken into consideration. But to oversimplify, generally speaking, if you're a green card holder, the IRS will have the tendency to classify you as somebody who's domiciled in the US. So globally speaking, unless you prove otherwise, you will be basically classified in the same category as US citizens for estate tax purposes. And so why is this distinction important? Well, this distinction is important because people who are considered domiciled in the US have a lifetime estate tax exclusion of over $13 million. At the time of filming this video, around 13.6 million. However, do keep in mind that with the Trump tax cuts expiring in about 2 years, we do have to see whether this will be continued, renewed, carried on. Otherwise, this augmented exemption or an exclusion sunsets, and the amount goes back down to around $5 or $6 million, if I am not mistaken. This is the case for people who are domiciled in the US. However, in the case of people who are not domiciled in the United States, so foreign investors, the exclusion, right, is only $60,000, which, if you come to think of it, is a very low amount, meaning that anything over $60,000 in what is considered a US Situs asset, and we'll get to that in a moment, can be taxed at rates of up to 40% at the moment of the passing of the person who holds the asset. So 40% is a pretty high tax rate. When it comes to determining what is a US Situs asset, we have to look at US law. Basically, there are some things that are very clearly defined in the US Situs asset category. Real estate is considered a US Situs asset. So if you own rental property in the United States, if you own a vacation home in the United States or something of that nature, then that is considered a US Situs asset. And even though you are a non-citizen, non-domiciled individual for US tax purposes, you will be charged estate tax upon your passing on any real estate held in the United States. In addition to that, stock in a US corporation, so all of those shares you own on the New York Stock Exchange, right, that S&P 500 index fund, that NASDAQ fund, all of that is considered a US Situs asset. Basically, if you die and you hold those kinds of assets, you will trigger the US estate tax at any level above 60,000 US dollars. How can you own US Situs assets, which can be some of the most profitable investments in the world, and still manage to legally avoid the US estate tax? Well, there are a couple of options. Option number one, which is very popular among foreign investors, is to use what is called a blocker corporation. So a blocker foreign corporation. This is because foreign stocks are not considered US Situs assets. So let's say that you want to own a piece of US real estate and you own that through a British Virgin Islands company. Well, in that case, upon your passing, what your heirs will inherit are the shares in the BVI company, not the US property, meaning that the US property never changes ownership. Therefore, it does not trigger estate tax. The same thing happens to your US stock portfolio. If you own your US stock portfolio through a blocker corporation, like the example I just gave, a BVI company, for example, then upon your passing, your heirs will simply inherit the shares of the holding company in the British Virgin Islands or the Cayman Islands or where it may be that is tax-free, and the US Situs assets themselves, meaning the shares that you own on the New York Stock Exchange, those will not change ownership, and therefore no estate tax will be triggered. Option number two, you could set up a US domestic trust to hold US Situs assets. Now, this option is not as popular as the blocker corporation because it involves relinquishing a certain degree of control over the investments, and many investors do not like this idea. And this is because in order for a trust to effectively protect you from estate taxes and to exclude and extract the US Situs assets from your estate, it has to be an irrevocable trust. So therefore, you cannot change the details of the trust once the assets have been transferred into it. And in addition to that, you have to make sure that the trustee is a 100% independent person that serves as the administrator of the funds. They cannot, under any circumstances, receive direction or any kind of orders from you other than a general, overview of what your wishes are for the trust. And on top of that, in order for the trust to protect you against estate taxes, the beneficiaries of the trust have to be independent third parties. Now, these independent third parties can be your children, that there's no problem with that, or your grandchildren. However, you yourself have relinquished ownership of the US Situs asset, which, of course, as I mentioned before, reduces your control. On top of that, if you're watching this video from a civil law jurisdiction, you might have some issues in terms of, how you comply comply with taxes and with corporate transparency laws in your own country, because trusts are usually not recognized in civil law jurisdictions. So it may be an option to set up a trust. However, for most people, it's not the most practical option. However, it is out there. Another option would be to potentially invest in assets that are held in the United States, but that are especially exempt from the US Situs asset category. And the first option that comes to mind are US bonds that fall under the portfolio interest exemption. Now, I can't get into details into what that is. That would be basically a topic for another video. Stay tuned, we might do one shortly on that. But globally speaking, bonds that are issued by US corporations and by the US government that fall under the category of the portfolio interest exemption and therefore pay you tax-free interest as a non-resident investor are also exempt from US estate tax. So in a nutshell, it's possible to basically build a portfolio of US bonds, not US stocks, but US bonds, and it is possible to earn tax-free interest. And it is also possible to have those bonds excluded from your estate upon the calculation of the US estate tax. So that is also a very interesting option you can look into. A second option is US American Depository Receipts, now ADRs for short. So what are ADRs? ADRs are essentially basically mirror stocks that are traded on the New York Stock Exchange, but that represent shares in foreign corporations. So let's say you have a US brokerage account. Let's say you have an account at Merrill Lynch or at Citibank or JP Morgan. It may be easier to gain exposure to foreign stocks through ADRs than it is to buy the foreign stocks directly. Now, there are other brokerage accounts, certainly like Interactive Brokers, that allow you to hold foreign stock directly. So it basically depends on who you'd rather bank with, where you'd rather have your account. But know that ADRs are also excluded from your estate upon the calculation of US estate tax, as they are not considered US Situs assets. There you have it. Those are three major options to avoid US estate tax and still expose yourself to US investments to look for that great profitability that the United States can offer. Setting up a foreign blocker corporation, then holding US Situs assets through that blocker corporation, option number one. Option number two, setting up a US trust, provided that it is irrevocable and provided that it meets all the necessary requirements in order for the trust to exclude the assets from your estate. And number three, invest in US assets that are specifically excluded from the definition of US Situs assets and therefore allow you to have and hold them without being exposed to US estate tax. So this is what we do. This is Nomad Capitalist. We look for all the different alternatives that cater to all of your individual needs. So if you're interested in learning more about US estate taxes, US income taxes, and any form of tax optimization strategies at a global scale for entrepreneurs and investors, follow us on Instagram, go to our website, subscribe to our YouTube channel, and help us help you go where you're treated best.